Okay, you are welcome back. In continuation of the lecture on capital allowance, we are going to look at basis period for capital allowance. Basis period for capital allowance. So, basis period for CA. CA here stands for capital allowance. You'll be surprised that I'm talking about basis period for capital allowance. And you've heard of this word before, basis period. At that point, we were looking at basis period for assessable profits. Here, basis period for capital allowance. So what is this all about? This basis period for capital allowance is necessary to enable us know when an asset will first be entitled to annual allowance and initial allowance. Remember, capital allowance, we have initial, annual, investment, and what have you. Now, how will I know? How can one know when an asset will be entitled to initial allowance? For example, initial allowance is granted in the first year the asset is put to use and once. How will you know if you are given the date of acquisition? You'll be given the date the asset was acquired. So it is only when you do this basis period for capital allowance that you can know that. So we'll see that in a typical question. Now, where this happens, usually, most cases, if there is a question on commencement, are you together? Are we there? If a question is bordering on commencement and assets were acquired, so take note of this question on commencement. 2, new asset acquired, new assets acquired, and take note, date of acquisition is given. If that is the case, then you should be thinking of basis period for capital allowance. Are we there? I just hope we are going to take a very typical question to show you this. Now, how do we determine basis period for capital allowance? How do you determine basis period for capital allowance? There are 3 ways, or there are 3 things we'll be looking out for if we're talking about basis period for capital allowance. 1 is either we are looking for coincidence. Coincidence. What is coincidence? I will explain. Coincidence. 2, we are looking for overlap. Or 3, we are looking for gap. Okay, so what are all these? Coincidence. Under coincidence, we are saying where 2 periods coincides. These 2 periods we will get to see. This topic is, or this part of the topic is better understood with the question. Where 2 periods coincides, the period common to both is deemed to belong to the earlier YOA. I'll take that again. Where 2 periods coincides, the period common to both is deemed to belong to the earlier YOA. And then for overlap, we are saying again, has something to do with coincidence. Where 2 periods coincides, the period common to both is deemed to belong to the earlier YOA. It is the difference, the overlapping period, the extra period that belongs to the later YOA. Is that okay? For gap, we are saying where there is a gap, usually gap occurs in change in accounting date or cessation. Where there is a gap, the gap period is deemed to belong to the later YOA, except where the later YOA is the year of cessation, the period will now belong to the earlier YOA. So that's that for basis period for capital allowance. When we get to a question, a typical question, you see the beauty of this point. Having said that, let's go over disposal of QCE. Disposal of QCE. Disposal of QCE. All of these are under the outline. If you remember, disposal of QCE. What are we talking about here? Disposal. Disposal occurs where a capital sum is received on the sale of an asset. Disposal. Where a capital sum is received on sale of an asset, Are you there? Okay. So, once there is a sale of an asset and a capital sum is received, we say there is disposal. But note, for capital allowance purpose, disposal does not end here. Where an asset was acquired for a purpose and the purpose is over, we can say it has been disposed. Where an asset was destroyed by a natural disaster, earthquake, fires, flood, we can still say the asset is disposed. Where the asset becomes obsolete due to technology, we still regard it as disposed. Are you there? So, where there's disposal, what happens? When there's disposal, what happens? When there's a disposal, there will be need for us to determine what is called balancing adjustment. Balancing adjustment. This is where much of the work is. Balancing adjustment. And your balancing adjustment could either result into, are you there? Balancing charge. Balancing charge. Balancing charge. Or balancing allowance. So we'll take note on this now. Balancing allowance. So let's go for balancing charge first. What is balancing charge? Balancing charge. Balancing charge arises where the TWDV of an asset, right? The TWDV of an asset is less than the sales proceed. In other words, the sales proceed is greater than the TWDV. So, usually you want to compare the TWDV. So, it's going to be TWDV less than, right? Less than sales proceed. Sales proceed. Okay? So, usually, where there is a balancing charge, it is regarded as a profit. This is equivalent to what we call profit on sale of fixed asset in financial accounting. But in tax, we don't call it profit on sale of fixed asset, we call it balancing charge. Because, of course, the TWDV here is what is referred to as NBV there. Okay, and you always compare it with the sales proceeds. So, that's balancing charge. So, what happens? It is an income, so it is added to the accessible profit. In fact, it is added first before you take away your losses. Right? You add it first, then the loss goes down, if there is any loss. Now, another point with balancing charge is that balancing charge is restricted. Balancing charge is restricted to the amount of capital allowance enjoyed by the asset. What do we mean by that? Enjoyed by the asset. Let me give you a small, simple illustration here. Assuming I have an asset. Let me say A is the asset. The name asset is A. The cost of the asset is maybe 100,000 naira. Okay, right? And I'm telling you that as at the time I sold it, the TWDV is 80,000. Are we there? It therefore means this asset has enjoyed a capital allowance. Okay, capital allowance of how much? Capital allowance of how much? Of 20,000. How? What do I mean by 20,000? Because it has reduced in balance by 20,000. It has reduced in balance by 20,000 before it comes up to 80,000. So if you want to know the capital allowance it has enjoyed, just walk back. It gives you 20,000. Okay? Now, this same asset was sold. This same asset was sold for, okay, the sales proceed of this same asset. Sales proceed of this same asset is, say, 120,000 naira. Okay. Then I will want to check for balancing adjustment, either balancing charge or balancing allowance. What will I do? I will compare the TWDV to the sales proceed. Here, the TWDV is 80, the sales proceed is 120. And where the sales proceed is higher than the TWDV, or put it the other way, where the TWDV is less than the sales proceed, it results into balancing charge. So, here I will be having a balancing charge of 40. You agree? 120 minus 80. 40, okay? Balancing charge is how much? 40,000. So the question now is, should I take the balancing charge as 40,000 and take over to be added to the accessible profit? No. Why? My balancing charge should be restricted to how much? The total capital allowance that this asset that is being disposed has enjoyed is 20,000 from our working, isn't it? So the balancing charge should be restricted to 20,000. So what I will take to add to the assessable profit is 20,000. Are we together? But if it was the other way around, I mean, maybe my balancing charge was 10,000. Okay? And the capital allowance is 20,000. It is still the 10,000 I would take. Did you get that? So that is that. So it is restricted to the maximum capital allowance that the asset has enjoyed. So back to our from our illustration here, what I was trying to explain. So that is that about balancing charge and again the restriction, the difference. Like in that case now, I have balancing charge of how much? 40,000. And I'm saying that it should be restricted to 20,000. What happens to the other 20,000? The other 20,000 will be subjected to another type of tax, another kind of tax called capital gain tax. That's for another day. It's on another topic, capital gain tax. So let's look at balancing allowance. Balancing allowance. Balancing allowance is the opposite of balancing charge. So that means it arises where the TWDV is greater than. The TWDV, okay, is greater than the sales proceed. Greater than the sales proceed. Alright, where this happens, we say we have a balancing charge. Or in FA, you say you have a loss on sales of fixed asset. So what happened is another type of allowance. You add it up to your initial, when you pick your initial allowance, annual allowance, investment allowance. If you have rural investment, you add it, then your balancing allowance comes in. They are all added up to be deducted from the assessable profit, unlike balancing charge that is to be added to assessable profit. I think that's all for disposal of QCE. Take note, once there's a disposal, you are talking about balancing adjustment. Balancing adjustment could result to any of these two, and note the difference. And of course, under exam condition, you are always comparing TWDV and the sales process. You will start with the TWDV. Usually you start with the TWDV like this, TWDV. You put the figure there, okay? Put the figure there. And then your sales proceed. Sales proceed, you put it in jacket. Okay? Once, if your answer is in jacket, what happens? It is, see what I mean? Assuming, let me put figures here. This is 100,000. Okay? And this is 120,000 in jacket. So if this was to be the answer, the figures, what will have happened here? I will have gotten 20,000 in jacket. Is that correct? So if this happened, we say you have a balancing charge. But if it is the opposite, we say you have a balancing allowance. So take note of that. Balancing charge. This is technical way of putting it, but if you put it the other way, just know that once the sales proceed is higher than the TWDV, you have a balancing charge like this. 120 is higher than 100. Okay, so I think that's okay for disposal of QC. In the next class, we'll look at another aspect of capital allowance. On this note, thank you very much.